why I no longer do turnover tax. So in the last 12 years, since March 2012, there has been no changes to the legislation governing turnover tax. Not a raising in the 1 million threshold, no relaxing of the professional services rule. A lot of the rules in turnover tax is still exactly the same as it has been 12 years ago. If the threshold of R1 million kept up with inflation, the threshold should have been 2 million by now, but it's still sitting at that 1 million mark. So in 12 years, no change. That is the first reason. The second reason is that turnover tax is extremely manual. Everything is off e-filing. You can't register for turnover tax on e-filing. You can't submit your turnover tax return on e-filing. You also can't get your assessment for turnover tax on e-filing. You have to file the registration manually, then wait for 21 working days to get an answer. You have to file the tax return first on e-filing, and then file the turnover tax return separately on an appointment with SARS, and then still wait another 21 working days or longer to get the correct assessment out from SARS. So the entire process takes extremely long and is manual. Turnover tax in its current state, in the current trajectory of where SARS is going, is everything is manual, everything is still paperwork. Everything is slow. SARS wants to be technologically driven. We see AI. So SARS wants to have things automated. They've moved everything to e-filing. They don't want you to necessarily call the call center. They will rather send you to e-filing. They don't want you to go to the branch. They want you to go on e-filing. Where is turnover tax not? Turnover tax is not on e-filing. Additionally, anybody outside of a tax space do not know or understand turnover tax. It's very simple. If a bank asks for your assessment, they're hoping to see that, oh, you're a sole proprietor, or you're a freelancer, or they can see this as a company. But with turnover tax, sometimes the information doesn't even pull through properly. The assessments also take very long. So if you need to make a bond application and it needs to go in a month's time, and you don't have your turnover tax assessment yet, whoops, you don't have the assessment in order to apply for the bond application. Additionally, turnover tax is supposed to be a way that you can pay low tax on the income that you earn. But if you work as a freelancer, they still want to deduct 25% on what you earn, which means that you first have to prove to them that you are registered for turnover tax, which is a slip. Okay, so that is the second rule. The third rule is a lack of support. SARS actually has the smallest team. Maybe it's not even a team. Maybe it's 2 or 3 people in the entire SARS system. There's only a handful of people at SARS that actually does turnover tax on a regular basis. The call center only has the case numbers and the notes that they can see on the system. It's not even, so the turnover tax people that actually works in the department is tiny. The support for people registered for turnover tax is minuscule. So that's another reason why I no longer suggest turnover tax. And the fourth reason, it is my prediction that in the next 3 to 5 years, turnover tax is going to be repealed. The simple reason for this is less and less people are registering for it, and SARS is going towards an automated tax system more so than a way for the manual system to work. Everything that is manual is going to become automated. Now, for turnover tax, because it is not used very well, only one of 2 things can happen. It must be a way that you can do it electronically on e-filing, or it's going to be taken away, or it's going to become another category for SPCs. Okay, so that brings me to my next point. If I no longer do turnover tax, what alternatives are there? The first alternative is SPC, and there's a reason for it. There are very similar rules that you have to qualify for in order to register for turnover tax, which also applies to SPC. So it has to be a natural person, or the company must be owned by a natural person. You can't have shareholding in other things or in other private companies to qualify for SPC. The effective tax rate on SPCs are about between 0 and 20%, which makes a small business corporation, an SPC, a little bit more tax efficient than a sole proprietor. The only downside of an SPC is you must register on CIPC as a company, and that comes with a lot more compliance requirements. So you have to file annual returns, you have to file the beneficial ownership, you have to do financial statements. So your actual admin is more in an SPC. The second alternative is to just be a sole proprietor. That's trading in your own name. And I usually say it is easier to trade in your own name if you are doing less than 300,000 Rand per annum in turnover. And so because your admin is less, there isn't that many compliance requirements. I'll do an entire video on effective tax and how to calculate it. But a sole proprietor's effective tax is between 0 and 35%. It's not, effective tax is not the same as tax brackets. So those are the alternatives. And now there might be people who is going to go into the comments and go like, yeah, but I save a lot in turnover tax. And as a tax practitioner that's been doing this stuff for over 15 years, I have just seen that the tax saved in turnover tax is not worth all the downsides. The juice is not worth the squeeze. Maybe the last 4 or 5 years, sure, I've had some clients who really benefited from turnover tax and being on it, but my perception is that it's completely ignored by SARS. Many accounting firms do not consider turnover tax as even a viable option for people. So they completely skip over turnover tax and then rather focuses on turning them into an SPC or staying as a sole proprietor. So those are the reasons why I no longer suggest people try turnover tax. If this video does not convince you and you still want to do turnover tax, there is a very good company in Woodstock, Cape Town, who will do turnover tax. The name is Galbraith Rushby, but honestly, it's just not for me. Cheers.